Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Gold is having a record-breaking run right now, with the price of the precious metal surging well past $3,000 an ounce. Gold's long been seen as a safe option, and the boom reflects the volatility in global markets at the moment. One of the main ways Australians invest in gold is through ETFs, exchange-traded funds, and one of the best named ETFs comes from global investment giant VanEck. The ASX code for its gold bullion ETF is NUGG, N-U-G-G. Doesn't get better than that. Remember, this is general information only, and you should seek professional advice before making investment decisions. Cameron McCormack is Senior Portfolio Manager at VanEck. Cameron, welcome to Fear and Greed.
Thanks for having me.
We'll get on to NUGG in a moment and your other ETFs involving gold. But what's driving the price of gold at the moment?
Yeah, it's been an interesting environment for gold. And what's, quite paramount is that it's not your traditional drivers in terms of the performance of late. It's been a multitude of things. Now, if we take a step back and look at the geopolitical environment, unfortunately, it is quite fractured. And that's really been a key driver of the performance we've seen of late. If you think about more recently, we've seen weakness in the US dollar. That's been a key catalyst for gold. And more broadly speaking, the, lack of clarity around tariffs has really spooked the market. And that because gold is seen as that safe haven asset, that's been a key driver of performance as well. Now, if you think about the last 3 years, what we've seen consistent buying of gold from central banks looking to really diversify their reserves. And that's been the ultimate key driver of why the gold prices moved past that $3,000 mark in USD dollar terms.
It does come down to supply and demand. There's actually a very limited supply of gold in the world. And when you're talking about central banks demanding it, it's just the fundamentals of economics that is actually pushing gold up. Is that right?
Yeah, certainly. If you look at gold miners in terms of their supply, it has dwindled over the last 20 to 30 years. So if you take it from a literally lack of supply coming into the market and you're seeing, quite strong demand, naturally that imbalance is going to continue to drive the gold price further up.
So has this bull run, is it different to previous bull runs? Certainly the price is higher than most other bull run, any other bull run in fact, but is it kind of typical of a bull run?
Yeah, so if you look at, this bull market relative to previous bull markets, now if you think about the period between 2019 and 2020, there was quite a consistent bull run in terms of the gold price, and also coming out of COVID as well, there was quite a consistent bull run. Now the key driver of those two bull runs was really two things. There was concerns about the broader economy. If you think about the global financial crisis, the onset of that, but also the staggered, reacceleration in growth was quite, a slow burn. Now that was a key driver for gold as well. And what we saw as well is during those environment, the US 10-year real yield continued to decline. And from a technical basis, the gold price has a very strong negative correlation with changes in the US 10-year real yield. So because of that decline, that was a key catalyst for why the gold price increased.
Okay, what do you expect happens next? And that's probably a totally unfair question, Cameron, because if you knew that, you probably wouldn't be working. But what's the prognosis for gold over the next year or two, do you think?
Yeah, so from VanEck's perspective, we do see further upside from here. And the key reason, unfortunately, is that if you think about the geopolitical environment, it is very fractured. There's, ongoing concerns about this tariff war being quite prolonged. Markets don't like this uncertainty, and that's really a key catalyst for why gold is in favour at the moment, and it is really why we think it's going to be in favour going forward. Now, another area that we really like as well is gold miners. Gold miners, in terms of their pricing relative to their fair value, is trading at a 25% discount. So if you're looking for other ways to really play gold, more broadly speaking, we think gold miners are very well placed going forward as well.
Okay, well, we might come into some of those options in a moment, but just quickly, you mentioned central banks buying up gold. Why are they doing it? I know the Chinese central bank has been a lot of news about that one buying up gold. Is it the safe haven reason, or is there more to it?
Yes, if you look at the central banks, the key ones buying are actually emerging markets. And the key driver of that is that they're looking to diversify away from the reliance on the US dollar. So really it's a play to decouple from the US dollar, and really gold is seen as a way to, really play that direction.
Stay with me, Cameron. We'll be back in a moment. I'm speaking to Cameron McCormack from VanEck. So you were talking before the break about the central banks diversifying away from the USD. Let's bring it back to sophisticated investors and even retail investors. Where does gold fit into their portfolios?
So if you look at gold on an isolated basis, it is volatile relative to other asset classes. But the key benefit of gold is that it has a very low correlation with other asset classes. So if you think about in your traditional, bond and equity portfolio, having a sleeve of gold as part of that broader portfolio has shown over the last 15 years to increase your return while targeting the same, risk profile. So from that perspective, it really is seen as a really good way to diversify your broader portfolio.
And I appreciate this is the Dorothy Dixer for VanEck, but ETFs, why ETFs when you're buying gold?
Yeah, there's a range of ETFs on the market giving direct exposure to the spot price of gold. From our perspective, we offer NUGG, and the key, differential for our offering is that it only gives you exposure to gold held at the Perth Mint. If we think about some of the other players in the market, the majority of them do give you exposure to gold, but it's held at the JP Morgan Vault in London. And with those, gold bars, they come from all around the world. So that include the likes of even Russia. So from that perspective, if you're looking for just, exposure to Australian gold, that's a key differential there.
And tell me, does VanEck, as the issuer of the ETF, so I buy a unit in the ETF, does VanEck actually, as the issuer, own the gold? I presume it's not in your vaults. I presume it sits in the Perth Mint. But you actually own the physical gold, is that right?
Yeah, so if we went to Perth Mint and did our due diligence, there would be an allocation, stored away for our NUGG ETF. That gives you direct allocation to the underlying gold.
Okay. And so can individuals, I'm not recommending this at all, but can individuals they can buy gold certificates, I think, for the Perth Mint, so they can actually own the gold themselves, I presume, rather than doing an ETF. Yeah,
so that investors do have the option to, get exposure to the gold themselves through, for example, Perth Mint. The key difference when you think about ETFs is because you're investing as part of a broader, offering, you're getting an institutional rate. And that's typically, in terms of the management fee, less than what you get as a, retail investor trying to access gold yourself. And that's really the key advantage of, an ETF offering opposed to taking a direct ownership.
So not all gold is the same. You can have NUGG, which is direct gold holdings, but VanEck has other ETFs, so gold miners you mentioned before, for example. So just kind of explain why an investor might think about gold miners rather than gold.
Yeah, so there's really, two key reasons why gold miners. The first one being that it gives you a leverage exposure to gold. So typically, when the gold price increases, gold miners increase by, a higher multiple, and also on the downside as well. The second reason why you may want to invest in gold miners is that if you look at where prices are currently relative to their fair value, even despite the increase in the gold price, gold miners are still trading at a 25% discount on that basis. So from if you think about more broadly speaking, the investment complex, a lot of asset classes are very expensive, and gold miners is one of those few asset classes that we think are really undervalued at the moment.
Why is that? So we're talking Northern Star and Ramelius and those sorts of stocks. Is it, the price of gold has run, but they haven't run as hard. I think that's what you're saying. Why is that?
Yeah, there's a range of reasons. The key one being, if you think about the evolution, particularly coming out of the global financial crisis, what we've seen is quite a prolonged growth rotation. And as a result of that, unfortunately, I think gold miners have sort of become a bit out of favor, given that the tech players, the Magnificent Seven, have been very, very popular. So that's really the first component. And I think more broadly speaking, value companies and that in itself leads itself to gold miners have just been out of favor because of that environment. But having said that, we've started to see a bit of a rotation over the last few weeks. If you think about the equity markets of late, there has been a rotation out of US tech, in particular, into European markets. That's really a signal for a value rotation. And as a result, gold miners and anything sort of value orientated has become back into favor. And we think that, potentially going forward, there could be further, I guess, legs to this potential rotation.
Cameron, thank you for talking to Fear and Greed.
Thank you.
That was Cameron McCormack, Senior Portfolio Manager at VanEck. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before investing. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.